This is the end, my only friend, the end of our elaborate plans, the end of everything that stands, the end, no safety or surprise, the end. I'll never look into your eyes again.
Good morning, good afternoon, good evening. No clue what time you're watching this. Hoping that you're all stocked up for the radiation fallout, since everybody out there on Twitter and social media is an Iran, U.S. expert and biological warfare expert, so we'll leave that alone. But I have you here on Weekend Wall Street, which is a very inaccurate but still very useful predictor of where the markets are due to open when futures start trading, which is in about, what is this, 2.5 plus 6, 8.5 hours at 6 p.m. Eastern Time tonight, since it is currently 9:35 in the morning over there on the East Coast, 9:35 in the evening over here on Sunday night, and I have some things to do early Monday morning, so I will not be doing the video, which you already know, when futures open, which is what I typically like to do. So anyway, since everybody is an expert on Iran and B-52 bombers and everything else, we will leave that alone for the experts, and we'll do a quick refresh here. And look at that. The Dow futures are now pointing to be gapping down minus 1% at minus 430 points, which, again, is inaccurate, but a fun tool to, play around with prior to the opening of the video game. So anyway, let's take a quick recap because, it's been shit. It's been shit. I mean shit. 2 red weeks in a row. The week prior closed down minus 27.66 points from where we opened on the Monday, 6,463. This previous week was down quad OPEX week and minus 36.16 points for the week. 2 red weeks. Neither of these weeks have broken greater than 100-point range. But it doesn't matter. Because, as you already know, and as I shared there on Monday about how the correlation between 6,982 shows every single day, and it showed on Friday, the 60-15, 16-10, 60-10s were $4 over there on Monday when we had that push up to 60-45 gap filling, 60-50, 83 being the high of the week. And even there on Friday, 6,982, and what did you get? You had the opportunity, should you have chosen to have taken it, to have gotten a little bit better than a $3 credit, as we avoided 59.50 like the plague, even though we had that big gap down over there on the futures over the weekend. One thing I am going to point out to you, as you already know, that futures are currently pointing down. They're better than they were 2 minutes ago. Better than 2 minutes ago. We're not down minus 1% now. Still got 8.5 hours to go before the futures open. We've had 3 red closes in a row. So it's a red flag is what it is. It is a red flag. Going back prior, this year only, I'm only looking at this year, we have had 4 red closes in a row 3 different times. Back when we had the little dip there in May, down to 57, 67, 41. Keep that in mind. Remember that. Over here where we had the tariffs, April 3, bang, bang, bang. 4 in a row. Had the low, April 7th. And earlier in the year, back in February, after we put in the top on the 5-year anniversary of COVID, February 19th, 61, 47, 43, 1, 2, 3, 4 red closes in a row. Granted, the day after, February 26th, was less than 1 point. It was still a green close. So again, something to keep in mind, because your 3 red closes in a row is a red flag. And if we open minus 1%, if we do open minus 1%, which is getting better, it's getting better. Maybe Iran wants peace again, and that's going to be our catalyst again. But if we are going to be looking at that, then obviously a green close is a close above 59.68.784 on Monday. And at this present moment right now, that is a little bit too risky of an idea to even be considering on where I sit. However, if you can get a $4 credit on something like that, and you can use a little bit of profit from last week, Iran wants peace. We all know that. Bring it over to the QQQ, and the QQQ is even more absolute shit. 2 red weeks in a row, minus 3.18, which is legit minus 3.18 the week prior. Last week, OPEX, Quad OPEX, we closed minus 3.76 from where we opened on the Monday. Red week. From the previous Friday, June 13th, my 30-year whatever anniversary when I got married, 526.96, 526.83, literally 0.13 from the last Friday close. So Imad making $18,000 on multiple days during the course of this week on QQQ puts. I appreciate all the comments that you make for me, dude, but obviously you are the one who's fucking good at this, because those trades with that resistance area that we've got, that 535, 533 resistance that's been kicking off here for 3 weeks almost, getting down below that 530, but more importantly, keeping above that big 528.61 for the most part, other than here on these little dips. It's a damn good play that you got there. And hey man, 18 grand, I'll buy you a lot of rations for the radiation fallout that the world's about to go under, because that's what everybody's calling for. Bring you over onto the IWM. And the IWM, again, 2 red weeks in a row. And last week, I mean, come on. Seriously, come on. Like, why even open the market if you're going to do something like this? Well, because, there's a lot of day trades to do. A 3-point range for the entire week. Closed down minus 1.27 points. That's it. And we got 2 red weeks in a row. Now, I did put in a new column over here for those of you that, sit there and screenshot and study. How does he do these spreadsheets? These spreadsheets are so fantastic. I put in a new column on the year-to-date for the IWM, because I know, top of my head where we're at. But then just to be accurate. So you have the QQQ up 2.44% year-to-date. You have the SPX up 1.09% year-to-date. 6% for the month, but 1.09% year-to-date. So a number that you're going to have to remember. You're going to need to remember it, because we're floating around that area. We floated around there on that ideal dip, which we'll get to in a minute, there on Friday pre-market, when Iran didn't want peace. But then after they wanted peace, we never came close to it, but we were close to it. The number you're going to be wanting to remember is that 5903.26. That's where we opened the year at, over on the SPX. 5903.26. So the common sense respect for this video game that we play would be that should we get a close below that 5903.26, if it is not greater than a significant amount, for example, the 58.96.68 where we opened the month of June at, or the 58.61.43, which is the low of the month of June, which is only a 198 point range for now, one would have to assume the algorithms are going to jump in to make the market green again as we come into the end of the quarter, the end of the first half of the year, and that is going to be 6 trading sessions unless, the nuclear fallout is so significant that the internet doesn't work and the markets are closed. We've got 6 trading sessions left in the month of June, the quarter, which ends on June 30th, the first half of the year, which ends on June 30th. So we're going to come back, we're going to go forward, we're going to go back, we're going to go forward, but first thing I'm going to bring you on to is the charts. So on the SPY chart, which I'm using only because it's clean, it's the only reason I'm using the SPY chart, and this is in significance of the Fibonacci spirals. Fibonacci spiral hit on May 19th. Top hit on May 19th. Unfortunately, we only got a 3% dip. From that dip where it was a Trump-induced tariffs are coming off. We got to deal with China. We pushed up here to the 605. Perfect, no problem. We have a tiny little gap. If I recall, I may be wrong, but I believe we've got a tiny little gap from back here last week, Friday. In fact, go over here and just check on the SPX. Last week, Friday, 59.76. Nope, that's not right. 60.45.26. 60.50. So that gap is gone. Gone. Completely gone. So I can remove that because there are no gaps to the upside. 60.59, there are none. There you go. That's why you got to check your work. So that is gone. We have this tiny little gap to the downside, which, again, as we've looked at over this over and over again for the past couple of weeks, this is where our wave 4 bottom that we are still expecting, because we are forced to believe that we are still bullish. The data over there with these 2 red weeks, which have not even been able to produce a 100-point range with everything going on, also suggested that we are supposed to be looking for the upside. Onto our SPX here with the same charting of the Elliott wave that we have been looking for this move down for the wave 4 low. 59.41 would be a perfect ABC, a C equals A. The ideal target being that 59.21, 59.11 area to the bottom, which is where we were on Thursday night, early Friday morning, before Iran said they are willing to accept a peace discussion.
It will be not a game changer, because that's not a nice enough term. It will be wonderful. It'll be so beautiful. It'll be a gift from heaven if it works.
Move to the downside here. I be wrong. I be wrong. Undo remove triangle, because I see a gap which is not filled, which is right on there. I know I have it on my SPX chart, but right there is a gap that needs to be filled to the upside, which, hey, happened this week. What do you know? So I be wrong. We do have a tiny little gap to the upside, which I believe some of us know about. Maybe not. I don't remember. Whatever. Doesn't make a difference. We're all going to be dead in a couple hours anyway. ABC, boom, boom, boom. We're still looking for that bullish wave 4, because that's what we are told we are supposed to be expecting. Come over here onto the SPX, looking at this as a gap, because this drop of minus 21.35%, where we were down minus 20% for a total of 23 minutes. The drop down there after 600 days without a minus 20% correction, 48.3504 being the low, 48.1802 being the 2022 highs. Every single gap that was needing to be filled, going back to that 48.18, completely filled. In fact, we filled every single gap of 2024 in this 5-week drop. Now this bounce to the upside, again, we have that tiny little gap to the upside over there in that 61.47. Because I missed it over on the one chart and I missed it over here, I will be moving it over and placing it right there, which it's close enough, just, horseshoes and hand grenades. A 25.32% bounce, and we have these gaps that are down below that are obviously unfilled. Zoom out a little bit wider just to get a better view of where we're at, and once again, these moves that we have had in previous rallies, previous moves, you get that close to 20%, greater than 20%, greater than 25%, you're getting yourself a dip. At least 5.9, that was the lowest, bring it back so you can see a little bit of a wider view. We come off this incredible minus 27.54% correction, which took 10 months to do, back here in 2022, got ourselves a bounce, got a little 9% drop, got a 21% bounce, got a 10% drop, 11%, 28 minus 6, 14 minus 9.7, plus 20.08, minus 21.35, and here we are, 25.32, because everything is going great. Deals are being done with tariffs. Tesla's robo-taxi is going to change the world. Everything's fantastic. So why should we dip? There is absolutely no reason to dip. But while we're on this chart, again, this is where I've discussed it, I believe, but I'll bring it into context. I don't have the COVID on here because it's greater than 5 weeks, 5 years. But off the COVID lows, into the 2022 top, into the 2022 bottom, where we are due to believe it is our 1, 2, we completed our 3, we completed our 4, and we are in the final stages of 5, where this is only the beginning. Wave 1 of that 5, the wave 2 of that 5 to be our dip, the wave 3 of that 5 to be a multi-month, very similar to here where we went from October all the way here to February, almost greater than 2-year run. That would be similar, the distance that we are expecting that we would be getting this move to the upside on the wave 3, somewhere into the midterm elections, call it, during 2026. But the problem I have is where your Fibonacci's, your primary 1, primary 2, whatever, primary 1, big 1, 61, 18, 34. So we barely fractionally took out the rule of this where the third wave cannot be shorter than the first wave. And 61.18, and we took it out by 20 points. And we're supposed to say, 30 points, that 29 points. Definitely, yes, we are in a bullish move. That's, it's up to you. So on the ES, I'm just looking here for where we're going to kind of change tunes, right? Looking at this as a seasonality subject because we are going into June. We remember very clearly the high that placed at the end of July 2024, beginning of August, before that big dip. We remember the big high that we had there in July, end of July of 2023, after they invented AI, right around where the Russian invasion was at 4101, and then we dropped right back to the Russian invasion of Ukraine at 4101 when Israel invaded Gaza at 4122, and we went into that rally. But we topped right there in July. You come over here and look at your 2022 drop where, yeah, we started in June. We had a nice little drop, which was the end of our third wave. The bounce went all the way up into the early middle portion of August before you got the final leg down there into October. That's your seasonality when you're looking at that. Come over here into 2021, which was actually a pretty cool year because it was so perfectly programmed by the algorithms where you'd go up into OPEX week. And then after OPEX week, you'd get a 2 or 3% drop. And then you'd do it again, and do it again, do it again, do it again. 2021 was fantastic. I loved everything about it. Come over here into 2020 after we had the drop in COVID. And again, you had your bounce going up into the middle portion of June, your dip taking out the June lows, and then the move to the upside all the way into the very end of August, the very beginning, first day of September, before you got that big dip, 5%, whatever. Come over into 2019 and look at your seasonality of 2019. Same shit. Big bounce coming in here up until the middle latter portion of July, and then a little bit of a dip. Didn't take out the June lows, but then you come over at 2018, you look at the same thing where, we were coming off of our big February drop, 11%, the April double bottom, and moving on upward into June. Very boring, very horrible. We were off by 9 points in calling the top there in September, which we kind of knew a couple weeks in advance. And then from September, you got your 20.8% drop into December 26, 24, perfectly timed. Anyway, it's not so much of a history lesson as it is that 2017 was fucking terrible, horrible year. Couldn't even get 15-point range on average. And you come into your 2016. Your 2016, you had your Brexit right there at the very end of June. Your bounce up into August, which took you back to a perfect Fibonacci alarm, 2134, right on up there to 2190, and then the drop into the Donald Trump election, which, as you all know, limit down, boom, green 15 minutes after we opened up. So from a wide range point of view, you can see here a pretty clean channel. You can visualize, without knowing the Elliott wave at all, a 1, 2, 3, 4, and pending 5 movement, which you look at your angles of how your bounces all work. Your angle, you could copy paste this clipping off of the bottom from Israel and put it over here, and you're expected to believe that we are going to the 7,000s before there's any kind of major correction. That's what you're expected to believe. But it's not going to happen anyway, because we're all going to be dead because of the fucking radiation, because of the nuclear war. So we come on to the QQQ, and your drop on the QQQ, ABC, bang, 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 minus 25.59%, and the bounce coming off of here are 1, 2, 3, plus 33.40%. And we can't even fucking get down below 525. So anyway, the same view over here on the QQQ, where we did fill this gap, so that is gone. We have a fractional tiny gap to the upside, which I'll go ahead and put on here while we are here, just so that we do not miss that. It's about a point, but it's still a gap. And I will make it my beautiful green. I apologize if I'm wasting your time. I could put some elevator music on and clip back onto this, but I think a couple of people want to know how. I'd prefer to be accurate to the penny, but I don't want to waste your time. And here we have our gap over here from early part of June, which, again, we still can't get down into. So if we're looking at this as an ABC structure for this wave 4 correction, 521 fits. Like I've shared with you, all the different warning signs. Ideally, 511. Ideally, 511. But we'll see what we get. Again, here, QQQ, just looking at it from a clean point of view. The one thing that you are going to be made well aware of is you are about to get your bullish crossover of the 50-day and the 200-day. We're a couple of days away from it. Right now, you've got the 50, the 100, and the 200-day moving average, all within about 1.5 points of each other right there below 500. So that's pending. It's on its way. It's going to happen no matter what. And as you see here, the big gap up above the 200-day moving average, well, call it what you want. But looking at this from a technical point of view on the QQQ, here's our 1 hour. And as our 1 hour has been fading off, we have been building a tiny little bit of a bullish divergence on the 1 hour. Come over onto your 4 hour, and we'll stick to the same time frame. The 4 hour is far from anything bullish. In fact, it's never, ever gotten oversold. And this is on the QQQ. Now we come over onto the NDX, and again, we have the exact same view on the NDX, that we are not oversold, we are nowhere near oversold, and thus because we have this momentum to the downside, we should be expecting that we are going to get oversold. A big oversold warning like what you have back here when we bottomed out. The oversold buy divergence that we had when we were selling off. The oversold that we had before we kind of got a little stall and a little bounce. But an oversold reading is what we'd be looking for. Something for the RSIs to be breaking down well below 20, down into the teens, preferably down into the single digits. But again, it doesn't matter because we're all going to be dead because of the nuclear fallout from, the bunker bombs. On the Dow Jones, 1, 2, 3, again, little tiny gap up above. Wave 4, expecting, again, don't expect too much. 50-day moving average being down here. Right around 414, 411, if everything is perfect in a perfect world. But you do have your gap over there at 417, 418. So, try not to be too pessimistic. IWM, again, plus 25.74%, down on the year. I still see this as a completed 1, 2, 3, 4, 5. You got two little gaps up above from during the course of the week. Still can't get below 207. Still haven't filled this gap back here down to 205 until we can get this thing breaking down into 203, which if we do get it to 203, we're going to be ridiculously oversold anyway. So be careful on your downside expectations below that 207. So I think I've covered this. I will bring you on over back to the Google Chrome, and we'll take a look at this from a daily point of view. On the daily point of view, looking at the trading RSI and the grandpa RSI. Trading RSI, nowhere near an oversold warning. Nowhere. MACD, you've been crisscrossing sell divergence for the better part of 2 weeks, but price action will not let you get down. Over on the QQQ, the exact same reading, the exact same view, the exact same repetition of what's been said for the past 2 weeks. Over here on the IWM, the exact same thing. Looking for more downside, pointing for more downside, but can't get this thing to break out of a wet paper bag. So, here's where it gets a little bit interesting, okay? Weekend Wall Street. It's pointing at minus 1%. I'm pretty good at what I do, but everybody's going to be watching here, investing.com, to watch the futures as they open up later on tonight around 6 p.m. Eastern Time. Everybody's going to be looking over here at the U.S. Treasury, looking at the bond market to see where yields are as the market opens up later on tonight. Kind of introduced to you a couple of, I've introduced to you Sem Karsan last year. One of the brightest people on Wall Street. Really is. If you recall, in October, he was calling for the market to bottom January 13th. Come on back. And as we recall, let's get here a wider view. We'll go out here 180 days. And it was January 13th. Sorry, March 13th. Probably not January 13th. It was March 13th he was calling for, and it was March 13th where we bottomed. Right there, March 13th, on the day. Same day as our Fibonacci spiral. March 13th, same day. Is this here? No, gotta go wider. 180. Right there, March 13th. Bang, bang. Same that we were looking for. A little bit of a bounce and then a drop. Bring you back onto your Google Chrome. Here we go. Buy volume before Feb OPEX. 10 to 15% drop. Bounce to 6,000. And then in a question mark. 35 to 50% crash.
Each of you to shout your own name. Do that. Because it's about all of us. It's about all of us.
Like I said, You are expected to believe that we are going higher. Be very careful about that because you have been brainwashed for how many years to always expect that the market goes higher, that crashes and bear markets don't happen when only Republicans are presidents, that war doesn't matter, because it really doesn't. War doesn't mean shit. It means absolutely nothing. I showed you there. You can look back on your own. When 9/11 happened, we were above 9/11 in middle of October. When we went into Iraq, we bounced back up all the way to the 2000 dot-com highs. Israel invaded Gaza, that was the bottom. Russia invaded Ukraine, that was the temporary bottom that we then broke down later in March. But I expose you here because, again, nobody knows anything about the future, other than me. But he's also been warning that somewhere, somehow, there's going to be an event in the near future, near being, guess your time frame, where Donald Trump will be able to institute martial law. And again, I'm not an expert at any of these things, but I just bring this to you as a warning because once again, when we come back on and we will finish off with the VIX. The VIX 2102, 2102, 2102, 2102, 2102. 2102. We know everything that we want to know about the VIX already, about that 2102. So I bring you on to a final view here of this, and that being the full moons. Full moons, we can now make this white, as I expected, which meant we were putting in a full moon top. Full moon, 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 full moon. Smoke a joint, get on your chart, draw some circles. It'll blow your mind. The new moon, pretty damn good as well. The new moon is going to be happening this week. The new moon is going to be happening on Thursday, if I recall. Let me make sure. I am wrong. The new moon is going to be happening on Wednesday. Wednesday of this week. So, let's try and predict the future here. Let's try and predict the future here. We have been seeing 6,982 every single day. We cannot break down anywhere below that 5950, and our ideal dip to the downside continues to remain that 5921, 5913. I can't chart nuclear war. I've never had the opportunity to chart nuclear war. So, I don't know. However, coming back on here and trying to predict the future, where are we? I want to go out on a limb and say that we get a full new moon high, meaning we have our move to the downside because of this move which is taking place with the bunker bombing of Iran, that Iran says nothing happened. Everything's normal. And we get our bounce. And now we have an A wave and a B wave and a C wave. Back down to that 57.67. I'm just going to go out on a limb and try and say that, I can see that. We'll see how things go. So anyway, guys, that's unfortunately all that I have for you right now. I wish you all the best in lining up in Costco to buy as many rolls of toilet paper as you can because the nuclear fallout's coming. I wish you all the best in, going, joining those anti-MAGA, parades and, all the other things that are taking place, since nobody really likes watching baseball. And when the markets get open later on tonight, I'm sure that I'll check in and I'll have an email out for you tomorrow on Monday prior to the open, and we'll see what we have.